2, 1. We are live, guys. This is Tuesday, June 29th, 2021. Shout out to my brother. It's his birthday today. He is turning 25. Crazy. This dude is 25 now. And killing it. I love it. I love it, man. Keep doing what you're doing. Keep being an inspiration. Let's get it. So, hopped on a little late today, guys. I was watching the Federer match with my dad, and we were in the living room together watching the end of it, and just had to, make the most of the time that I have remaining at home. And we had to watch that while I was watching the markets here, so I didn't want to get distracted and do a whole bunch of things at once. So sorry about that, but we are live now, and I just wanted to see. We are live on Twitch as well, so I want to see if Twitch is working. Let's take a look. Stream preview. Yes, it is working. It is working. It is working. It is working. Okay, awesome. So I am going to update some things. So live trading category is futures trading. That's what we do around here. If this is the first time you guys are watching, welcome to the channel. We are Train, Trade, Triumph, and as the name implies, first step to becoming successful in trading is to get your mind right, and so that's what we are here to do today. So let's jump in. And what I usually trade is the ES, the S&P 500 futures, and but of late, I've also been using my trading strategies for crude oil, gold, and also the 30-year futures, 30-year bond futures as well. So those are the four main contracts that I trade, and the strategy that I really use is fib, retracements and extensions, retracements for entries and extensions for the targets. And I coupled that with time frame correlation, trend analysis, and also market/volume profile. Actually, it's volume profile, not market profile. So you guys can see some of those at play here already. So on the bottom left is my higher time frame profile. The top left is the median time frame profile. The top right is my main chart, which is the lower time frame profile. And then the bottom right shows the delta histogram, so I can see where buyers and sellers are potentially coming in and more in control. So, given all that, I wanted to tell you guys about a couple things that happened this past few days. One thing is I had a talk with my mentor. Shout out to my mentor, Thiru Nagapan from Master the Markets, who basically lit a fire under my ass and told me that I needed to get my strategies right and get my mind right, and the way that I explain to people. He basically told me, dude, if you want to be in front of or be watched by thousands of people, then what kind of conviction are you going to be coming into the market with? What data are you going to have when you talk, and with what confidence and clarity are people going to be able to assess what you're saying? Or are you going to be able to talk with confidence and clarity, essentially? And right now, the way I've been talking and the way that I've been dealing with stuff in the markets has been honestly a little haphazard. If I'm being honest with myself, it's, my strategies, I do have strategies that show the expected values, which are very good. I've shown this to you guys before, but maybe I'll pull it up again right now, which is my strategy on average can expect to produce, here, I've just pulled it up right now. Let me go ahead and share this, because this is months of data collection that I am proud that I captured. So that's it. So there it is. So yeah, this is what I'm looking at here. So I analyzed 164 trades over the course of 3 months, just over 2 months actually, and so 164 trade entries. So from February 8th to March 19th. So that's not even true. It's only just over a month. I did collect more data. Leading to, let's see, exactly April. So I did collect data from February to March, March to April, so over 2 months. But this data is only from February 8th to March 19th. And during that time, I hit my 127% target, my fib extension target, 56.7% of the time, with an expected outcome of just over $1,200 per trade. And then I hit my stop loss 43% of the time for an expected loss of $190 per trade. So net, I could expect $637 per trade given the expected values, expected percentages multiplied by the expected dollar value. I extended that to 161% target. I hit that 44% of the time for an expected gain of $1,800, and then I hit my stop loss of 55% of the time for an average of $212 per trade, $212 of loss per trade. So my net for, if I increase my target to 161% extension instead of 127, I would be making on average $700 a trade. And then finally, I did the third one, which is what would be my expectancy if I had a market structure 2 trailing stop loss target. And this is something that I learned from Master the Markets, which I would love to talk to you guys more about if anyone's interested. So that one, I had an expected value of $978 per trade. Out of 188 entries, 121 were winners, 67 were losers, and the losers had $188 per trade loss, and so an expected outcome of $562 per trade. So the numbers show that given my entries, I should be expecting to win around 50%, between 44 to 64% of my trades, and expect to earn between $500 to $700 per trade. These are very good numbers. This is a very solid edge, very solid backbone of the strategy. But given all that, my actual performance has been not very good. And one of the reasons for that has been that my risk management has been very poor. My analysis for how the market is going to perform has been, like, I have accounted for the range of outcomes very well. And my intuition has been on point. But what I end up doing is, if you guys notice, my average loss has been very small, or it should have been very small given my strategy. It should have been around $200. But my average losses for my TopStep account has been much higher. Some of my losses have been over 500, some actually over 1,000. And so what I realized that I was doing was I was just getting overconfident. I was like, I'm pretty confident about this happening, so I'm going to have 3 contracts, and I'm going to increase my stop loss just so I can cover for the price, dipping, down to a certain level, and then let me bank on my analysis and my intuition being right. And many times what's happened is that has proven to be very costly, and I'm clawing back out of it. And so given that it's almost 50-50 and sometimes even less than 50-50 chance that I would win a trade, the fact that a single trade has me wiped out $500 to $1,000 or more, that's really digging into my P&L. And so if I'm being honest with you guys, my risk management has been piss poor, and I realized that I just need to take a step back. And like the thing is, like, there's certain trades which work out really well. There's certain analysis that I do that work out so well that I'm just like, whoa, this is like I'm onto something, and I am, like, literally I am, and it gets me overconfident that, okay, I can, keep doing what I'm doing, and it'll work out. But like I've said before, trading is an inside job, and as long as I continue to believe that I'm right around the corner, that I just need to keep doing what I'm doing and I'll get there, that's not true. And my conversation with my mentor proved that I need to finish what I start, that I need to have more more discipline to stick through what I start and finish it all the way. Right now, like, the strategy which I showed you guys is still just the bare bones. Like, okay, have I tested refinements to it? Have I, created a clear checklist no matter what? Like, I have a checklist in my mind, and I have like some things on there which I can say that are like potential checklists or like things that I look out for, but I follow it when I want to, right? It's not something that if I have a clear, order of checklist that I do, that's something that I think will take me to the next step. And I need to do that. And so I have not been doing that. And so I'm paying for it dearly. And it's okay. I can, I'll survive, but I'm not thriving. And so I really want to thrive right now. I really want to make the most of what I need to do for my next step of my life. And I'm not willing to put up with this much longer. So yeah, that's what I realized that I need to do. And so today is going to be more of actually, one of the things I want to do is maybe do live sessions where I do back testing. And so we can see like exactly how that works. And while I'm talking, I just decided to enter this trade right now. If you guys saw, what I was doing was I was at a downward bias for this trade because we had come all the way back down to the levels we were at pre-market. And so I said, okay, we're in a so let's back up here. I'm going to show you guys like what I'm thinking, and I'll keep my risk small, which I wanted to do, and it's fine. I'm following my trade plan. So what I see here in the bottom left, you guys can see that my that the 38.2% retracement on this uptrend for this Fibonacci matches up well with the volume profile there as well. So I thought, okay, why don't I, if we did hit our highs earlier today at the 127% target, then we're going to be retracing. We might just hang out in this area, or we might continue to go lower to 42.55. So I said, okay, if we are going to go lower, then this retracement from the VWAP, crossing the VWAP from the swing high here to the swing low, retracing to the 61.8%, and funny enough, the 127% target were the swing lows from the overnight session, and the 161% target is right at the low of the day, low of the overnight session. So I thought, okay, these are good targets to have for this downtrend. So I entered there. If I do get stopped out, that's fine. I will have another entry at the 38.2% level, since I think that's going to be where it might come up to before it goes further. So actually, I might just kind of get out of this right now because it's already penetrated, and I think I'm going to move this up. So I'm going to have these entries at 42.8250 now. Not one, but I'm gonna have 3 targets. Okay, so yeah, that's what I'll do this week. Is I'll spend some time sharing my backtesting strategies and actually like show you guys how I do it, so that you can see like, okay, this is exactly how you do backtesting, which helps solidify any strategy that you guys are working on. The one thing that I'm learning is learning the process of how to develop and refine a strategy, and that skill can be useful for not just for trading, but for anything that I do in life. And so yeah, so I'm happy to share that with you guys, and maybe that'll help me get more clear about my goals as well. Like, okay, so how do I add or remove parts of the strategy? How do I refine this? And so so yeah, I'm going to take a step back from talking about my life. Let's talk about the markets now. So the ES, I've entered this bracket, or I've set this bracket order up. Let's see how it reacts. It's already penetrated up above the 61.8% level. So I could have still been in this trade. I decided to get out at no loss. So that's one trade. Let's go to GC. Part of me, one of the feelings that I'm getting is that, okay, I should have just stayed in this trade, given that it only went up 42, 42.80, 45. It went up to 42.81. I'm gonna stick with this. Or am I? This indecision is part of one of the reasons why I have been led to self-sabotage. Where, I make a decision, and then based off of what the market does, I flip-flop. And so really noticing that and just saying, okay, that's the price that you wanted, and I'm going to get in on that price. And actually what I'm going to do is make that a 2-point stop loss, 1.5-point stop loss, give myself a little bit more leeway, and then 42, and then enter a little bit lower. No, 82.25, there it is. And then my first target, I'm going to move down a little bit. Second target down here, and then my third target would be here. Okay, so those are my 3 targets. Let's see what happens. I'm going to move this one even further up, so make it 2 points even. My first target is kind of like a break-even target. Second target is at the low of the day. And third target would be the stretch at the 38.2% level. So that may or may not happen today, but we still have about an hour, less than an hour to go in the day. So that's ES today. Let's go to the 30-year. So the 30-year today has been, we broke out of this channel that it has been, and it came down exactly, and this is why I believe Fibonacci works like a charm, because if you look here, this is the higher time frame now, starting at the 0% level, came down to the 100% level, came back up to right around the 61%, and then finally came back up there again. Kind of stayed in this range here, and then came back up to the 61.8% level, and then bam, right to the 127% level, and again it came back up to the 61.8% level. So at this time, I would say there is a chance. I'm gonna change this to here. Like, this is a high volume node area, which has most of the trades over the last since for the last week plus, or about the last 10 days ish. And so we're still in that area. The thing is, this entry would have been the early morning session, and so I didn't know at this time, since it was kind of in this channel, whether it would retrace to the 38.2% level before it came down, or just hang out here. So that was a I didn't want to commit to myself to an entry here, even though it was beautiful, because it came up exactly to the 61.8% level, and it came down to the 127. So that would have been a nice trade from last week that it did that, last Friday, I believe. So in the medium time frame session, you can see it's in a relative downtrend, even though it dipped. And we're again hanging out in this high volume node area. And let's see where it goes from here. I have a feeling that it'll retrace to the 38.2% level, that it will come back up here before it does anything else. Let's see. But we could have picked up enough sellers here that we go down even further. So it could go either way right now at this point. So I'm just looking for how the market reacts to, how the market not reacts, but where the market acts with strength when it goes in a certain direction. So my strategy here would be, if it starts moving in one direction, if it starts moving up here, so what I would do is have an alert, let's say 160.09. So I would have an alert here. And then what I would do is, once it breaks through that, I would wait for a retracement to enter. So basically, it's like, oh, it's committing to one side. And then I would wait for a retracement before having my target at this 38.2% level. So that's the way that I would do it. And I will have one down here as well. So my other kind of breakout area would be below the low of the day, which is 159.15. So I'll have one about 5 ticks down. So 159.09. So that's what I would do to confirm, okay, I'm going to watch out for a Fib retracement once it passes through that level. All right, so let's go to crude oil. So crude oil has backed off the highs from late last week, still in an uptrend, even though it's retraced now below the 38.2% level, which makes me think that it bounced off pretty well off of this overnight high. Or no, actually that was the opening high, so early morning high. And so I would say that we are going to be going short on this. I would have a directional bias to the downside. Let's see how the fibs look. We might go long before we go short. That's what it looks like right now. So you see how we have a double top. Price broke all the way through VWAP to the 100%, to the 61.8%, down to the 127%. And then now, strong buyers there, That brought it all the way back up to VWAP to the 38.2% level. And then now it's kind of hanging out there. I would expect it to come down here, but you could also go further up. So I'm going to have an alert. It did break through that, so I am going to have an alert here. Let's see how it reacts. I'm tempted to enter here short.
Order rejected.
Oops. So since I have my ES order pending, I can't have multiple orders since I can only have a limit of 3 orders at a time. So this is still kind of hanging out. So I'm going to let this play out. Let's go back to crude oil. Basically, which one do I have more conviction in? For this one, I would have to assume that since we broke back through VWAP pretty strongly, going short on this into VWAP is not something that I would take. And so this is part of my checklist. So this is not a trade that I would have taken, that I should be taking, because I would be going back into VWAP. I would have to wait until this confirms strength to the downside back below VWAP, have a swing high below VWAP as well for me to go short. And so I'm not going to take this trade short. And we are breaking through the 38.2% level as well, so not a strong trade to the downside, even though my directional bias is still to the downside. So let's go to gold. Let's see, it has a little bit more movement. And so gold is something that, man, I can't say that I saw it coming because there were two potential outcomes. And yeah, that alert was for crude oil. It did hit my alert level at 73.27. So yeah, that would not have been a good short trade. Thank you, Lord. Okay, so for gold, you guys can see that it had a steep drop from the mid-June time frame. From there, kind of was in a channel and compressing really, really strongly. You guys can see how much it was compressing. Here, let me extend this over a little bit. And how much volume was being accumulated in this area. And so my thought process was it's going to go again, since it was hovering between the 100% level and the 61.8% level, that it would either go up to the 38.2% level, which is up here, 1803, before it came back down, or immediately would go to the 127% level. But I was looking for the right entry, and so that entry, I missed it. It happened overnight, where price went immediately to the downside. Not immediately. Price went precisely to the 127% target right here, and it bounced off as if there was something there exactly waiting for it. So again, these are the trades that I'm looking at, which gives me so much more confidence that, you know, the Fibonacci retracement and extension approach, the strategy does have legs. But, you know, going back to this, you know, you look at how much compression was going on, you know, how the market was going up and down, you know, not too many points that were being moved. And then finally, I had an alert overnight, you know, right at this level, which it hit, and then it signaled that it was going down. So in that case, I would have not entered here, but I would have, let's see where and how I would have entered, and see if the entry would have been valid. So since we had triple top here, I would have had my 0% level there, came down all the way here, and so my entry would have been actually this morning around 7:30, when it retraced to the 38.2% level, and this would have been an awesome entry, because I know that whenever price goes through VWAP, then it very likely also will come back above VWAP to pick up buyers or sellers in this case before continuing down in that same direction. And so that's exactly what it did. And look at how beautiful these target settings were. 127% would have been my first target, or first target beyond my break even, and then 161.8% would have been my second target. And so this was beautiful. This was absolutely beautiful, and this is exactly the kind of trade that I would have taken. And so my back testing shows that, you know, something like this has legs again, and but this is something that I could not have taken unless I was watching the market pretty closely this morning and seeing that, oh, okay, this was broken. I'm gonna sit in front of my laptop and see this happen in real time. You know, I would have seen this. So let's say this happened at 6 a.m. in the morning. So yeah, this happened at 6. So I would have been like, okay, price is moving pretty sharply up now, right up to VWAP, kind of hung out, and then broke through again to the 38.2%. So I would have had my entry here, 1775.2, let's say, and then at least 2-point stop loss, 77.2, and then had my targets, as you can see here. So again, this gives me confidence that there are entries that I can make like this, but I do need to be more diligent when I set these alerts to follow through on them and say, okay, well, I just need to be awake more. And you know, just get in front of my computer whenever something like this happens and be like, okay, there's a chance that this will happen, and I just need to take advantage of it right then and there. So again, so that's in a gist my strategy. So basically, I'm looking at time frame correlation. Okay, in the higher time frame, I have a bias one side or the other side. So depending on which way the alert goes, okay, the market has played its cards, has shown what it's going to play, and then now I'm going to be ready for my entry, which is right on point. I don't need to have, you know, huge stop loss. I can be very tight with my stop loss, thereby allowing myself to take advantage of these trades very easily, or with low risk, not easily. I need to be careful how I phrase these things, as my mentor has told me. So that's GC. Let's go back to ES. We have now entered this trade with a 1.5 point stop loss. That means I am risking 225 without any fees. So 3 contracts. Each contract I'm risking $75, and so I'm in this trade now. It did go up to 38.2% level, which I thought it would. So only question is it going to continue to go further up, or is it going to come down now and set new regular trading hour lows? We opened up here, right around there, and the overnight lows, as you can see, are right around the target levels that I have for this trade. So that's what we're going to look at right now. While we do that, guys, I'm going to check if my Journalytics connection is working, and it's not really. I'm going to check if my Twitch stream is working. Let's see, it is working. To the channel. Okay. Yeah, so tomorrow I'm going to show how I do back testing. I'm going to have my I use MT4 for my back testing, so I'm going to have that ready. And let's get on with it. I need to do that with my mentor anyway, so big talking to that I got. I'm ready for what to do next to make my dreams a reality. Sorry about that, guys. So we're in this trade, going short. I've given myself enough, I feel, enough of a stop loss for price to kind of do its thing. Let's back up here and see if there is a fib. Nope, it went through and below that. I'm gonna back up. Let's see higher time frame. If there is, oh, so that's the one. Broke through. Yeah, pretty confident that we're gonna go to the downside here. Only question is it gonna pick me up first before it goes down? Or I have precisely entered at the right time. Sometimes it's like this. Sometimes we just sit and watch and wait and see what the market does. While we do that, why don't we take a look at crude oil, which, by the way, showed a lot of strength through VWAP and is continuing on the uptrend. So would not have been a good entry to go short again because of VWAP. So this is going to be a big part of my entry checklist, which I need to heed all the time. And then 30-year, anything developing here? Not really. Again, it bounced here. Let's see if, yeah, actually, there's a new fib forming right there from, yeah, so right there. So this fib is right here. I'm looking at where the 61.8% level was, and then looking at where the 38.2% level was. Very interesting. So we're in this range now between the 100% level and the 50% level. Maybe I'll add that here. Let's see if there's a correlation right to the 50% level. Beautiful. So we're hanging out between the 100 and 50% levels right now. So this would have me believe what I'm going to do here is also add the 50% level. 61, 0, 60. Okay, good. So it's going to be 50. Yes, the 50% level. So the 50% level is very strong for the 30-year. Comes down to the 100%, retraces to 50, comes down to 127. So same thing with this. We have 100, or sorry, we have 0, 100, retraces to 50, which it did right here in the overnight session. In the morning session, is coming back up here, and so I would venture to say that an entry around here would be very solid with a target of 160.50. So that's what I'm going to do. I'm going to have a not there, but I'm going to have one here, 159.23. So basically, if it dips below that, retraces, I'm looking for an entry right around here. So I'm glad I just did that. I'm glad to know that the 30-year 50% is very strong. Go back to crude oil, kind of hanging out in that area still. This is no longer valid. What I'm going to do is move this and see if there's a correlation. I'm going to add the 23.6, see if there's a correlation. Kind of, not really. At 74.18, so I'm going to move that down a little bit. It's very uncanny, right? Right up to that level. And so I would say that we are coming down to 71.31. So that's something for us to look out for. So I'm going to have a target and have one down here at 72.69. So basically, again, the same way market shows its hand, comes down here. I'm going to wait for a retracement to go short, or market comes all the way back up here, 73.45. Giving me a good entry point for me to go short directly from here. So I missed this from earlier today, from the morning open. So that's solid. I think price is going to come back up here. Price is definitely going to come back up here, and that's going to give me a good entry to go short. So that's CL, that's GC, ZB. Actually, let's look at GC real quick, see if there's anything forming. Yeah, this is still in play, so I'm going to hold off. This is just beautiful, man. This setup this morning was just beautiful. Lots of setups this morning. Let's go back to ES, our entry on this trade has been fluctuating. Let's take a look at how the market is reacting to this. We're at 230 right now. I do not think we're going to what was that alert? GC 1783. No. CL 7269. No, I don't know. I don't know which one that is. But yeah, so price is hanging out. The volume has been drying up as well ever since this massive fall from earlier this afternoon. So we could kind of just stay in this range the rest of the afternoon and not get down to overnight highs, or sorry, overnight lows. Here we go, baby. Let's see some weakness. Again, first target is at the 100% level that it dipped down to. Second target is at the low of the day, and the third target is at 42.55. That is a long shot the longer this goes on, and that's actually what I'm going to do is change this to 127%. So this is more doable, I think. So first target again stays the same, third target stays the same, second target I'm moving it up to 127%. That's one of the things I did not do last year, or even 1-2 months ago. Before I started doing this live, was using time frame correlation, seeing, okay, what is my directional bias to in the higher time frames, and then let's take trades in that direction. But what ended up happening was, since I started doing that, I became overconfident in the direction that I was taking, in the direction that I was going, and I was like, okay, well, this reduces the number of trades that I take by a decent amount. And so I'm like, okay, well, let me increase my risk, and that did not help my expectancy. And so so I became clearer in what I was looking for, but that did not lead to good decision making when I was actually placing trades, because I kept moving the stop loss. I kept second guessing myself because I was like, okay, well, this is really high risk, and I did not lower my position sizing, adjust my position sizing. So yeah, good lessons. So now I'm back to what I used to do when I traded, which is keep your stop losses small, keep your stop losses tight, and enter more trades than you like. Since I'm trading other instruments now, enter more trades. Look at entry signals for other instruments. Set up alerts, and you can trade more hours. You don't have to just trade the hours that you're in front of the laptop for that hour and a half and try to force trades at that time. Even though there's opportunities at that time, you don't have to force trades at that time, and there's big opportunities other times of the day. So that's what I learned. That's what I'm going to do now, and I'm excited. This is exciting stuff. One thing I do need to do is do actual analysis on different instruments too, and see, okay, look at analysis for higher time frames and look at different instruments as well. So see how this all matches up. All right, we've got about 21 minutes left before market closes. The last 11 minutes is going to be this last 11 minutes before this next 11 minutes before the last 10 minutes is going to be key, because the last 10 minutes is always crazy, and I need to see some thing that shows me that price is weakening at this level. Otherwise, I'm going to exit this trade for a loss. Again, I'm risking 225 on this trade. I lost a trade earlier today, 2 trades actually, for $170 loss total. And so this would put me at around $400 loss for the day. So just letting you know what's at stake. Here we go now. If it passes below the 61.8% level, which is 4280, then I am going to be pretty confident about this hitting at least the 127% target. Basically hitting my first 2 targets. Very curious to see how my stream will look. Most of the time I have been at 30 FPS. There's times where I've dipped down to under 10 FPS. No drop frames. So maybe it's improving. I ended up, actually I'll show you guys when it's all set up. I'm excited about this. I'll show you guys. I'm excited about it. Come on, bro. Let's show some weakness here. Come on. I'm going ahead and doing this now because let's go ahead and test it. Let's move 3 ticks since I've entered. Connect. All right, coming up right to that. (2:47 p.m.) Okay, so while this is going on, (2:49), and finally we're dropping. Finally, we are dropping. Let's go. May not happen. There's enough weakness here, and I think we're going to go down now. There you go. Seller stepped in pretty strong. They want to see this go. They want to see this go, baby. Let's go. Buyer stepped in. This is the thing about trading at the end of the day. Is that you have these crazy moves, which some days you can take advantage of, but sometimes it just gets a little, shall we say, mentally taxing. Yeah, I'm tempted to get out of this trade since it's kind of in a channel in a high volume node, and just get out for a small gain or no gain. Tempted to. As soon as the price moves against me, I'm tempted to get out for a small gain. And if price starts moving in my direction, I'm like, oh, let me just stay in for as long as I can. So that applies in the macro, in my macro or swing trading as well. Just get out of my targets. It's when my target setting is very, I like my target setting. I really do. The other thing this could have already done is already exhaust itself in this move from 1 to 140. Yeah, I'm not confident here. I think it's gonna go long. I'm gonna move my targets up. And still gonna have this. Too much weakness. Or should I say too much strength? Yep, so I'm out today for $340 loss. Would have been out for even more I decided to cut my lashes short. That's just too much strength for me. Too much strength for one man. How much can one man handle? Funny enough, that's the 23.6% level right there that it came up to. Well, I'm out, right? I'm out today, guys. Good learning day. Good confidence building day. Now I'm going to spend some time to do some back testing, and I'm going to share with you guys what I learned tomorrow. I have my follow-up meeting with my mentor tomorrow as well, so lots to do to get my mind ready for the big leagues, which I know this is. So thanks for tuning in wherever you guys are. This will continue. This will thrive. Later.